In this video, I'm going to be going over the key things that you need to be looking out for the next time you go into one of these SEC filings. I'll leave all the timestamps for all the different SEC filings. It's in the video description. First, I'll go over what SEC filings are for people who might be new to this topic, and I'll give a brief breakdown of all the different filing types and the shortcuts that I've created for myself. But yeah, without further ado, let's start reading some SEC filings. So to introduce SEC filings to you newcomers, SEC filings are by definition financial statements, reports, and other formal documentation that public companies and insiders are required to submit to the Securities Exchange Commission. Now, I know that's a mouthful of words, but what that basically means is that these SEC filings are important statements from the company that might have an impact on the stock price. So these documents are filed by the company and their insiders, and usually these filings will have an instant impact on the stock price as soon as they're filed. So it's important to be able to read these filings quickly if you want to figure out why a stock is popping or why a stock is dropping like crazy. Now, I remember starting off, I felt like there was a lot of filing types to remember. You can see these Form 4s, these 8Ks, 424Bs, 10Qs, all that good stuff. So I'll give an overview of all these different filing types so you know what each of these letters and symbols mean. For this video, I'll actually be using BAM SEC since this is my favorite website when I search up SEC filings. We can look up Apple, for example. And as soon as you search up the ticker, BAM SEC organizes the filings into neat little categories. So up here you can see these are the financial filings, news filings, prospectuses, and ownership filings. Now these are the four main types of filings we'll be going over in this video. These other ones down here are pretty irrelevant, especially when you're only into day trading or swing trading. These won't really apply much to whatever you're holding, but these ones over here will. So starting over here with the 10Q and 10K filings, these are your quarterly and your yearly financial reports from the company. So in these filings, financial information about the stock is disclosed to the public. So we could just click on any one of these and we get access to all of their financial information. These filings are gonna include important numbers on the company's debt, assets, cash on hand, and it'll pretty much tell you the financial health of the company overall. So still using Apple as an example, we can get started with a 10K filing from last year, 2021. And as you scroll down and you see the table of contents, I know it says 59 pages down here. Sometimes it'll be a couple hundred pages, but you don't gotta worry about that.
Don't worry about it. Don't worry about it, sweetheart.
Because I'll explain all the shortcuts and keywords that you need to pay attention to. Most of the things here are just information for, bigger institutional investors and people who are trying to research the long-term viability of a stock. But as day traders and swing traders, we don't really need to know that. We just need to know a couple key things so that we can protect ourselves if anything bad happens. Now, the important things you need to know about these 10Ks and 10Q filings are current assets, current liabilities, and the company's cash burn rate. So if we go back to this website here, we can do Control F to search up any keywords we're looking for. And for the assets, we will search up current assets. And you can see here, it'll pop up all highlighted for you. And we can take a look over here. The main things we're going to be looking at are the cash and cash equivalents, since this is pretty much what allows the company to keep running and pay for any expenses like rent, paying workers, and anything else required to keep the company running. So we can see with Apple, they have $34 billion of assets from September 2021, and this is in billions because you can see that up here it says consolidated balance sheets in millions, meaning in millions of dollars. You want to make sure that these companies have a high amount of cash on hand just so that they still have plenty of time to operate. And you want to make sure that the cash equivalence is not that different from the previous years. So you can see here that Apple's down $4 billion in cash equivalents, but that's all right. They are a big company and they know what they're doing. They have billions of dollars in cash, so they shouldn't have much to worry about. The next thing you want to calculate is their cash burn rate. The way I calculate cash burn is by taking last year's cash equivalents and minusing it from this year's one. So for this example, I'll put it in the calculator. 38 billion minus 35 billion equals 3 billion. And we divide that by 12 for the 12 months. And the total calculation came out to be 250 million. So we know Apple's burning 250 million of cash per month. So it's not a lot. They still have plenty of time to operate at that cash burn rate. So we don't really have to worry about these guys putting out an offering. Now I'll get more into offerings right after we're done with this 10K filing. But yeah, the main keywords you want to pay attention to for this are current assets, cash and cash equivalents, and figure out their cash burn rate so you can kind of estimate how much time they have left to operate. Now, knowing all that information about the cash on hand and cash burn rate is really important, especially for penny stocks, and I'm going to tell you why in this next filing type. So the next filing type are your prospectuses and shelf offerings, and these include filings such as S1s, S3s, 424Bs, and it'll all be organized in this section down here. All of these filings are essentially the same thing because they allow the company to sell stock to raise capital from the open market. Now, companies will usually offer their shares because they just need more money to keep their operations going, and sometimes business isn't doing so well, so they're gonna have to offer up the shares to stay alive pretty much. So I'll be using ATXI for this example. We can take a quick look into their financial statements, and we will look up current assets just like we did in the last example. And you can see that cash and cash equivalents, these guys do not have a lot on hand. They have 890,000, and you can see in the last year they had over 3.7 million. So in the last year alone, these guys burned almost $3 million in cash. So you know that these companies aren't financially stable and they're running out of time to keep operating. What companies like these end up doing, you'll see them file for one of these prospectuses and shelf offerings. We'll click into this one, the 424B. And so here's the tip that I have for these offering filings. So this is a recent filing from October 11th. Right now it's October 14th. And you just want to quickly look around the filing for any big numbers that you see when you're scrolling through. Within the first few letters of this page, you can see up here, it says 2.6 million units. That means these guys offered 2.6 million shares onto the open market. And the next thing you want to look for is the price they were offered at. So down here, you can see it says the public offering price, which was $3.30 per unit. So these guys raised $12 million from the open market. And so let me show you how this offering filing affected the stock. So what I got up on the screen here is a chart of ATXI, and you can see that this stock used to be at $6 just last week. And when these guys filed for an offering, you can see that this stock dropped straight from $6 up here all the way down to $2 down here. And remember, the offering price was $3.30. So that means the company thought their shares were overvalued when they were still trading at $6, and they decided to make the offering price at $3.30, which was less than half of their stock price the day before. What ends up happening is after these offering filings, the stock ends up tanking because they offer more shares onto the market, which dilutes the shareholders since they own less of the company now because the company offered more shares. Companies tend to file these offerings overnight. So you can see that back here on this day when they were at $6, overnight they had a huge gap down all the way down to $3. And these investors who were in it from before didn't have any time to sell. So they were instantly down 50% overnight because of that offering. That's why it's important for you to check the SEC filings on a penny stock that is running, because most of the time these are garbage companies, right? They don't have the best financials and they are burning a lot of cash. So as soon as the company sees their stock price is going up, they're going to take that opportunity to do an offering to raise money so they can continue surviving and keep operating their company. In ATXI's case, they were able to raise $12 million. And remember, just last year alone, they burned $3 million because of that cash burn rate. So these guys will be lucky to even last 4 more years with this capital that they raised. So my tip for this one is to just get the main information out of these offering filings. The main information is going to be the number of shares they offered, the price that they offered these units at, and the total amount of money they raised from this offering. Let me just go over one more example to show you what these offerings do to these companies. So FAMI is a stock that I remember running back in 2020 and 2021. This was a big runner, and these guys used to be $60 adjusted for their stock split. You can see that every time this company spiked up, the company did an offering, and boom, overnight the stock would drop multiple percent. They did an offering back here. They did another offering back here, which dropped it from $20 all the way to $7 overnight. And over, when this company pumps, you can see that it pumped again all the way to 14. Boom. Overnight, dropped it to 7. Again, another offering. And that's what causes these shareholders to be diluted, because every time they do an offering, the price is going to keep coming down. There's going to be an increased amount of shares, and the value becomes less and less, and shareholder value just becomes destroyed after every offering. So typically, you want to avoid these companies with really bad financials, because the risk of an offering overnight is way higher compared to a stock like Apple with good financials. Now, the next filing type we're going to be going over are insider ownership filings. These are going to be your Form 4s and Form 13Gs. These filings will show you any holdings of the company insiders or any large investor that owns more than 5% of the shares outstanding. Now, these filings are very important because they give insights on what the insiders themselves think about the company. You can think that if an insider is buying shares, then they expect the price to come up. Otherwise, they wouldn't be risking extra capital into buying their own stock. And same thing goes for the opposite. If you see an insider selling shares, that could be a bad sign for the company, because then they would be selling shares to protect their money because they expect the stock price to fall in the future. So let's go into one of these Form 4 filings. So here you can see the person reporting it. And over here you can see what's their relationship to the company. So here it says that they're a director of the company. These guys usually own a pretty big amount of shares since they're on the board of directors. So the key thing you need to look at for over here is what type of security that these insiders are buying. Common stock is usually the best one, and you want to pay attention to the number of shares they bought and pay attention to see if they bought or sold the shares. So in this case, you can see that this director of Sava bought 100,000 shares at $20.69. You know they bought it because it says A for acquired. If it says D, you'll know they sold it because D is for disposed. In this case, a director bought 100,000 shares, which is equal to about $2 million worth of stock. Now here it says the amount of shares they owned after the filing. So after he bought these 100,000 shares, he now owns over 1 million shares in the company. So this purchase was a pretty big amount since he increased his company stake by over 10%. Let me show you the impact that this insider buying had on the stock price. So pay attention to the date this was filed. It says 8/16/2022 right here. And when we switch to the chart to check the date, this candle down here at the bottom says August 16th. So this was the day that they filed that they bought 100,000 shares of the company. Look what happened to the stock price afterwards. They went from $20 all the way to $51 just a couple weeks ago. So that's why it's important, in order to understand why this company is up so much from $13 to $51. You need to check their SEC filings, because on this day here, this is when the insider purchased all of his shares and other people started buying in as well because the director bought so much. And remember, when an insider buys so many shares of a company, that's a big indication that they are bullish and expect the price to come up afterwards, like it did here. So this was an example of insider buying. Let me show you an example of what would happen to the price if there was insider selling. For this example, I'm going to be using OTRK. And scrolling down a little bit, we can click on one of these filings. We'll just click this one from August 13th, 2021. And now you'll see there's a lot more transactions for this one. So you can see up here, this was a executive chairman of the company. So it's a high-ranking person. He knows a lot about what's going on with the financials and everything else. And you can see here that he acquired hundreds of thousands of shares at $4.80 just to dump them at $27. So he took all his shares and sold it on the open market at $27. And so let's see what happened to the stock price after August 11th. So up on the chart, I have OTRK, and the date of that filing we just went over was on August 11th. So if we scroll down here and look at the date, August 11th, right here, This is the day the executive chairman of the company sold hundreds of thousands of shares, and look at what happened to the price afterwards. The price dropped from 27 to below 9 just within the next week. Now, people wouldn't have known why this company dropped if they never read the SEC filings. That's why it's important that you just quickly read over a couple of the SEC filings of any company that you're possibly day trading or swing trading, just so you know what's going to happen to the stock price in the coming days and months. Now, the last filing type I'll be going over for this video are 8K filings. These are your news filings. And with these filings, companies will file for any company events or company updates so the public can see how the company is progressing. Now, sometimes these filings won't really have an impact on the stock price, and sometimes the stock will be extremely reactive to news. It's important that you pay attention to the title of these 8K news filings and you read into it a little bit to see what's the reason for the stock dumping like crazy or pumping like crazy. For this one, I'm using ALF as an example, and you can see over here on their news, they just announced that they're going into bankruptcy. So it says bankruptcy or receivership, and we can click this, and we'll just read into it a little bit. They'll say the full explanation of what's going on if you just scroll down a little bit. Down here it says, on October 14th, Alpha Inc. ceased operations and filed for a voluntary petition under Chapter 7 bankruptcy. So these guys are closing up shop. They're shutting down their company and want to file for relief by announcing bankruptcy. So when you hear that news, that's instantly a bad thing to hear about a company. So what do you expect is going to happen? Well, let me show you what happened to the stock price after the company filed for this 8K filing. So up on the screen now, I have ALF, and you can see that these guys are down 70% on the day. And on this daily chart, you see this massive red candle dropping from 80 cents all the way down to 17 earlier in the day. As soon as investors hear that a company is going bankrupt or they're stopping operations, people are instantly inclined to sell, which is why you see such a huge drop in price in such a short amount of time. I'm on the 5-minute chart now, and you can see that right after they filed it, boom, the stock instantly started dropping 50% within the first 15 minutes of the filing. And towards the end of the day, it ended up dropping 70%. So that's why it's very important for you to pay attention to these news filings, but make sure it's something that'll fundamentally impact the company. Now, if you see a news filing that says the CEO bought a new pet dog or something, that's not going to impact the stock because it has nothing to do with the company. But if you see some important keyword like bankruptcy, good clinical data, good earnings, or the CEO decides to lay off half of their workers, something big and important like that, you want to pay attention to. So make sure you're reading the titles carefully so you understand what's going on. Regardless, there's still many ways to make money in the market, even if a stock is going into bankruptcy like ALF. We're going to be making a video later on how you can make money off these penny stocks going bankrupt. So if you're interested in learning how, let us know in the comment section. If you enjoyed the video, please like, subscribe, and join the Rocket Signals community with our Discord link below. We guide and help any new and upcoming traders looking to get into the penny stock market. That'll be it for this video, traders, and I'll see you in the next one.